4K per child. No, it ain't 4K per child. What? No, it ain't 4K per child. Is you serious? Yeah, I'm real serious. Who keep telling y'all that? Huh? For real? No way. So you mean to tell me if I went to work and I had exempt on my W-2 that I don't qualify for this? You got that right, man. You ain't even have no taxes taken out. What you expect? Oh my God. It ain't no 4K per child just cause you been working and you got some kids. If you ain't got nothing in box 2, when it come down to file, you dead. No, you won't get that max credit. No, you won't see a big refund. And you had all the time to take off exempt to get you a refund. But we gon' work with your currency, aka Platinum, we handle the business. You know Miss Nene the golden in business. You know I ain't need have to mention. 1, and if you got all your documents, 2, then you can schedule a meeting. 3, if you had taxes taken out. 4, man, you know it's your season. It's your season if you made a bad. Had them taxes took out for the year. Cause you knew when it come down to taxing that shit, you went and took off his Zoom. Come and see aka Platinum Unlimited. If you earn it, we give you your benefits. And we file individual and businesses. If you come in correct, I'ma finish it. 1, and if you got all your documents, 2, then you can schedule a meeting. 3, if you had taxes taken out. 4, man, you know it's your season. We ain't gonna leave nothing on the table. If you work for it, then you earned it. I don't wanna hit by the credits. You know you ain't worked, then you don't even deserve it. So please, please stop sharing that. You gonna get 4,000 per child. It's crazy. And many of y'all don't even have jobs and ain't even work a day in your life. But you think you qualify for it. Please stop.
Greetings, everybody. How are y'all today? Yep, we're only streaming on YouTube and Twitter. So if y'all can go ahead, share, let them know she's not on Facebook. It's not live on Facebook. She's live on YouTube. I appreciate it. So while we're getting time for everyone to get the notifications, I appreciate you guys for joining me. My discussion on today, we're going to be talking about the different type of income. We know that the credits are up, and a lot of people they're trying to figure out, well, am I a person who is qualified to be receiving these maximum credit amounts that I'm seeing being posted or shared on social media? So we're going to discuss the types of incomes, what's the difference between the W-2 income and the Schedule C income. For my individuals who don't know necessarily what W-2 and Schedule C income, we're going to break it down, because you can have some W-2 income that is being reported on the W-2, but it doesn't necessarily qualify you for earned income credit. And then we have credits that is based on the income limits that you are earning every year that determines what your refunds are going to be. So I just want to have that discussion today. That is what, hey, Kimberly, that is what we're going to be talking about. So if you guys can, let's go ahead and share this out so we can get the conversation started. I'm excited for the upcoming 2024 tax season. I am still doing free estimates while we're getting the word out. I am still doing free estimates. The estimates will not start until December. The only reason why I'm waiting to mid-December to do the estimates is because that'll give you guys more time to have a more accurate account of what your income is going to be, going into the next season, based on how many dependents you have, what you can be expecting. But I would like to give you more time to get your incomes together. So yeah, you can put it in right now. And this is why I want to have the discussion, because before you start doing your estimates, I need you to understand how your income is going to be working. The income is not necessarily just because you got a business or you're driving for Uber or you're doing your own thing on a Schedule C. Your refund is not going to be as much as a person who is working and getting paid through a W-2 or a paycheck every 2 weeks. So we're going to talk about that. The Schedule C, anybody who knows about Schedule C, business income, it is different types of business income that is considered business income. The types of business income can be anything from selling t-shirts to selling cupcakes to, you could be making candles, whatever you're doing. If you're working from home and you're doing it like a call center, all those type of incomes, traveling nurses, truck drivers, individuals who have food businesses, all of those are considered Schedule C income. So what you see a person that is having a W-2 and 3 kids and they only made 18,000 and they're getting about 10,000 back, that's not going to be your situation if your income is coming from a business or Schedule C income, self-employed income. I want us to go through why is it different. And if anybody knows, it is because of the SE tax. SE tax is automatically attached to your Schedule Cs. So if you're reporting business income and you make $10,000, then you're going to be taxed about $1,500, $1,530 to be exact, on that $10,000 because you're responsible for your own Social Security and Medicare taxes that is due on the income earned from business, even if it's a service. So even with the Uber drivers, the Lyft drivers, Maple Bear, any of those rideshare companies, if you're in that type of industry, you still have to pay SE taxes on everything that you earn over $400. A person is legally required to file a tax return when their self-employed income exceeds 400. A person is not required to file a return with a W-2 unless their income exceeds the standard deduction amount. So just know the income and the requirements with W-2 income is not the same as the requirements for Schedule C income. Schedule C is subject to more taxes that's due on your income, and we're going to talk about it because in 2023, if you want to know about how much tax you're going to have on your business, whatever you have right now, do that times 15.3%. That is how much tax due in SE taxes. I said just SE taxes. That is not going to include the taxable income that you have if you have a tax liability over your standard deduction amount. The only thing that offsets the SE taxes is if you're making estimated payments. If you're not making those estimated payments, then it is not going to be a large refund for you in the upcoming year. Now, granted, W-2 income, that is because they have been paying taxes throughout the year. Their employer pays a portion, and then the portion that comes out of the employee's check only equals to 7.65. That means they're only being charged 6.2% Social Security and 1.45% for Medicare, versus the person who is Schedule C, we're being charged 12.4% for Social Security and 2.9% for the Medicare. So we're covering our entire amount that is due. The employer and the employee split those taxes when you're working for someone versus when you're working for yourself. Let me see, Miss Nene, I am looking to start training as a tax preparer. Do you have any suggestion for classes? Lily, well, I just started the refresher. It is for 2 weeks. You're more than welcome to inbox me if you would like, Lily, and we can discuss maybe you getting in the class. We are on day 2, though, so I do want to advise you of that. But if you want to send me a message through the business page, if you're interested in getting that refresher, please do. And I can contact you and give you more information. Okay? So like I was saying, the W-2s, the refunds, will be 9-10 because we have the 7430. That's up to 3 kids. It is no 4,000 per child. Don't make me play the jingle again. I don't need to play the jingle again. There is no 4,000 per child. But what you can get if you have W-2 income and you have dependents that is under the age of 17, that means you're going to be qualifying for additional child tax credit payment and an earned income credit if your amount is a certain, and I'm talking about your income on your W-2. If it is a certain amount, you will receive a good amount of credit, even if you don't pay in any taxes. So a person, and I give you guys an example of what I'm talking about. A person that has 2 kids, they make $15,000 in 2023. When they go to do their return, even if they didn't pay in that 10% on that $15,000, if their box 2 is 0, they can still potentially get a refund with those 2 kids and that $15,000 of about $7,000. 7, almost 8. It is still possible. But a person with $15,000 on a scheduled C and 2 dependents, instead of them getting about $7,000 or $8,000 because they get the same amount of credit, the only difference is the person with that scheduled C income is now responsible for that SC tax, and they are going to take it out of those credits. So instead of a person with $15,000 on a schedule C, their refund isn't going to be $8,000, $9,000. It's only going to be about 6, maybe 7, maybe. So we got to understand the different in the reporting of the different types of income. Social Security income. So let's talk about that, because I know it is a lot of Social Security recipients, meaning you get a check, whether it's SSI or SSDI. Some of you guys are allowed to work. Some of you guys, you can't work at all. It's because it's permanent disability payments. But if you are receiving SSI for you or your dependent, and if that is the only form of income that you have for the year, you're not due a refund. That is because the Social Security payments is not taxable and it's not earned. So either way it go, it don't have to be reported, and it's not going to give you any credit from reporting it. I can give you my word on that. Now, you can go and do your free estimate. That's fine. But I'm just letting you know, Social Security income is not going to pull you a refund just because you have dependents, if that's the only income that you have. Also, unemployment income. If that is the only thing that you had for the 2023 year, doesn't matter how many dependents you have. If you have it, if you did not let them withhold anything, you're not going to get a refund from it. If you got paid over the standard deduction amount for the filing status that you're using, you will have a tax due. So if you paid in money on your unemployment, the only thing you will get is the payment that you paid in. So if you got 3 kids and you got $15,000 in unemployment payments and you paid them $1,500, that's the only income you have, your refund is going to be $1,500. It's not going to be generating the child tax, additional child tax credit, or the earned income credit on there. The 1099K, retirement income. If retirement is all you did and you pulled from your savings, you pulled from your retirements, your IRAs, your trust funds in this year, and that's the only thing you did all year, you will not be getting a refund based on your kids. It is not going to generate you a refund. That type of income is not considered to be earned, but it is considered to be taxable. So at a certain amount, you income on that, you still have to report it. Cancellation of debt, the 1099-Cs, it is taxable income, but no, you cannot get a refund off of 1099-Cs, cancellation of debt. You're just responsible for the tax that is due. W-2Gs, that is for the people who are gamblers. You're hitting jackpots at the casino. You're winning scratch-offs with the state lottery. Maybe you won one of the lottery drawings, and it's a pretty good amount. Even if you have dependents, that type of income alone is not going to generate you any earned income credit or child tax, additional child tax credit payments. The income is not considered to be an earned income, even though gambling is a profession and it can be used as a business if someone is a professional gambler. That is possible, but just at a normal taxpayer level where you're just playing and you just like to gamble and you're hitting a little bit and you're losing a lot, it doesn't matter. That income on the W-2G is not going to be counted. It'll have to be over on the Schedule C where you're saying this is a business for you to be a gambler, and then that W-2G information can be used to prove the income that you're saying you're making as a gambler. But just on the W-2G by itself, it is not going to generate a refund for you. Secondly, well, now because we own about 5 or 6 different incomes now. Rental properties. My individuals who are renting out properties, or your property managers and you're getting paid cash, that rental property income is not going to be anything that's going to generate you a refund either. If you're receiving payments because you have your property registered with Section 8 or whatever, and they send you the 1099 miscellaneous showing your rents paid to you for 2023, that income that is on that 1099 miscellaneous is not going to count as earned income. So regardless, if that's all you were doing through the year was collecting rent payments, and that's how you was taking care of yourself, you had no other income to report, then you're not going to get a refund for your kids. It's not going to generate a credit off of rental income by itself. Y'all have to understand the difference. There's a difference when you're talking about a credit and a deduction. Credits is something that is paid to the taxpayer to help reduce the tax liability to zero and can potentially be paid directly to the taxpayer in the form of a refund. Deductions is only there to offset the tax liability due, and it'll never put anything back into the taxpayer's pocket, not as a deduction. It can reduce the tax liability to where a person can qualify and get more of their credits, to where they'll see more of their money that they paid in. But deductions do not work as the same as credits. Just like W-2 income does not work the same as Schedule C income. Schedule C income comes with a lot more than a W-2 because throughout the year, that employer and that employee has been covering federal taxes for that person who has been working in that aspect of being an employee throughout the year. When we're working and getting paid $400 or $500 per job, we are not giving the government anything out of that for as far as the money that is being earned in business. So that is why when we go and file, the entire amount that is due is on us as the business owners. Remember, employees only have to pay half of the Social Security and the Medicare. But a Schedule C filer, we have to pay the full, and I give you the numbers again, 12.4%. That is in Social Security, and it is 2.9% in Medicare. So if you're wondering why that information is not like, okay, I made this amount on my business, and my sister, she didn't make as much on her W-2, but she's still getting more money than me, and I made more money. The more you make, the more they're going to tax you. So you can't think that, oh, you got $18,000, $19,000 in business, you got 3 kids, and your little sister got 2 kids, and she don't make $12,000, and her refund is easily $8,000, and you're looking at your refund at the $19,000 level from your business, and your refund is only $6,000, $7,000, and you got 3 kids, and you're trying to figure out, like, how is that? It is because you are paying your Social Security tax, your SC taxes. And SC taxes is a combination of your Medicare and Social Security tax. And it's going to come out of everything you report on the Schedule C over $400. What if you have a part-time business and W-2 full-time job? Okay, so Kimberly, let's talk about it. So if, let's say you're working full-time, but you do on the side, and I have a lot of these individuals who have, they bake on the side, they do t-shirts on the side, they customize materials on the side. They have a lot of side business, but they still get up and go to work every day. So Kimberly, your earned income credit is going to come off a combination of what is reported as your wages on your W-2 and what is your net profit from your Schedule C. So we'll do a quick scenario, Kimberly. Let's say you're working at a job, and I keep the numbers low so it'll be easy for you guys to retain, and you can just fill in your own numbers on your own time once you get it. So Kimberly, let's say you make $10,000 at the job. You got that $10,000 on the W-2. But let's say that you have a business that you do on the side that don't make another $10,000, right? So you got $10,000 on your W-2 and $10,000 on your Schedule C. But before you could just say, I got $10,000 in business, what was the expenses? So if you have $5,000 in expenses, the net profit from your Schedule C is only going to show $5,000. So your AGI combined is going to be $15,000, but you will still have that 15.3% tax on the $5,000 that you had a profit from the business. I hope I ain't lose you. Did I lose you on that, Kimberly? I hope I didn't lose you, Mama. So if you got a part-time business and a full-time job, your refunds are still going to be pretty good. Because if the business is only part-time, you're not making a huge amount from that business, and you still have to include your expenses. So it'll be added into your income that comes with the W-2 as well to combine and make your AGI, but you will still have that SE tax on whatever the net profit is on that Schedule C. So we said $5,000 is the net profit. Kimberly, you're going to be due 15.3%. Let me see on that $5,000. Let me do the calculations. So we got 5,000, and we know that the tax is 15.3%. So $765 is going to come out of your refund. So instead of at a $15,000 income limit and you got 3 kids, instead of your refund being $8,000, and this is just the sake of, so y'all can follow me, instead of it being $8,000, it's going to be $8,000 minus $765. And that is why a Schedule C individual refund is not going to be as much as a person who is receiving W-2 credit, the credits from having W-2 income. Business income is completely different. It goes under a completely set of different rules for when you're reporting it, because the W-2 is already reported to the Internal Revenue Service. The person who became the employer of this person who gets the W-2 have been reporting payments, quarterly payments as far as payroll taxes for this individual. So the W-2 is easily provable. The Schedule C is not. That is why the Schedule C falls under due diligence. Okay, are you going to cover the thing about cash out? Miss Lisa, yes, ma'am, I will. So let's talk about it. The 1099Ks. We know that they changed it from if you received $20,000 or 200 transactions in the prior years, 2022 or earlier, you will receive a 1099K. Well, now it is now if you receive at least $600 and they don't care how many transactions, you are supposed to get one. The only people who are going to be getting those $600 1099Ks are the individuals who have registered with Cash App, PayPal, or Venmo as a business. I repeat, the only ones who will be getting the 1099Ks for the $600 is if they have a third-party network app such as Cash App, PayPal, or Venmo, and they are registered as a business. I know on Cash App, you will see a little green building next to your name that will let you know if you have said you are operating as a business. Also, if you're trying to figure out if you're registered as a business, if every time somebody send you some money, let's say they send you $100 and Cash App say you only got $98 available, that means you're registered as a business. They're taxing you on every transaction because it's recognized as a business. So if you have that, get that 1099K. That is proof of your business income. Yeah, Miss Lisa, if it's not registered as a business, they shouldn't be sending you a 1099K. Now, is there going to be instances where individuals are going to be getting these 1099Ks and they're saying, I'm not registered as a business, I'm not supposed to have this? Even if you receive it in error, you must report it. Now, the advice the IRS gave to individuals who attended the seminars over the summer was if your clients is saying that the 1099Ks was not for business transactions, they received it in error, the first thing they say for them to do is to contact the issuer of that 1099K. So it's like you cannot not include it. You must tell them to fix it first, because it is a chance if you send off their tax return without the 1099K that has been reported to the IRS, regardless of if it was an error or not, is not present on their return, it's a possibility that their returns can be held until they process and amend that 1099K that was reported. It is a possibility. So if they're saying it's an error, your first thing should be directing them to contact whoever the issuer. Call Cash App, call Square. If y'all didn't know, Square is Cash App. So for us business owners that do use Square and Cash App, they're the same payees. So if you get it in from Cash App and you saying, no, I don't supposed to have this, you're going to need to call Cash App and let them know, hey, I received this. I was not a business. This money was not used for business. It wasn't for a service and product, and allow Cash App time to withdraw that 1099K. But if you file and you just saying it wasn't for business and I ain't going to include it, that is not going to excuse you for being responsible for the taxes on it. And they can hold your refund or either write you at a later date and give you a penalty for failure to file and failure to pay if you do not include it. No, you sure can't call them people. I think Cash App only let y'all do what? Send a message. And I say y'all because I've been gave up on trying to get somebody over the phone. They email in the customer the chat app. So just know you got to report it. You cannot not report it if you get that $600. If the 1099K is more than $600. Now, what they say you can do is add it in. You can make the notation that it was received in error. It shouldn't have been included, but you got to report it on the Schedule 1 under your line 8 under other income. It still has to be reflective on your tax return if they have it in the system that you receive one. Okay, you said my 2 kids are disabled. Is it a different refund? I was also wondering, do you do tax courses online? So Miss Identity Fan, yes, I do tax courses online. My actual refresher that started on Monday is actually a virtual course, and we meet up on Zoom and I give the lessons through there. So yes, ma'am, I do. But let's talk about it because we do have individuals who don't know this either. Just because your kids are disabled, it doesn't entitle you to a bigger refund. What you are able to do if you have kids that is disabled and they're under the age of 16, as long as they're over the age of 12, if they're disabled, you can still get daycare credit for them. But you'll have to have a tax liability in order for it to work and generate anything from the 2441. But that is one of the credits that's available for people who have disabled dependents. And if your kids are over the age of 12 and you're still paying someone to sit with them, you can still use the 2441 for your disabled kids, regardless of their age. So it doesn't stop at a certain age if they're disabled in your kids. But that's about the only thing that's different. When they're disabled, the credits are based on their ages, not their situations. So if they're disabled and they're under the age of 16, they're going to get the same amount of credit as a child that is, 16 and younger and not getting anything. It's going to only pay out one amount. Okay. And so, so may I use you for an example? Because if you have disabled kid, that means you get Social Security benefits. Now, with you being the person who is caring for these kids, and I'm pretty sure they're under the age, they're allowing you to receive the payments in your name. When you get that SSA 1099 at the end of the year for the payments that you receive for your kids, that income is not going to be included on your tax return. But if you're operating a business on your own, or you're working somewhere and you just get the payments for your kids, then you can still report the Social Security. It's not going to make a difference either way it goes with the reporting, but you will still be able to file and get your money based on the earned income that you had from when you was working either on that job or in your business. But the Social Security income isn't going to be reflective of anything extra. Nothing. So those incomes, y'all, I know it's a lot, but we got to understand how these credits work so we can stop thinking that when we see in maximum credit amounts or income limits, that everything applies to everybody. It does not. We are snowflakes. I call us snowflakes for a reason. I say we're snowflakes because we're all individual. We all have different situations. Nobody, one situation is going to match exactly how another person's situation is. When it comes down to the amount of dependents where they live at, you can do an entire apartment complex. Not two people in that apartment complex is going to have the same refund, the same income, the same. It's going to differ somehow. So everything is not for everybody, and everybody isn't doing refund. My business owners, if you're making $30,000, $40,000 in business, regardless of if you have them kids, the only thing those dependents is going to help you do is generate a way to help offset the tax liability that is due on the profits from your business. I'm just being honest. Let's see, at $40,000, what would your tax be? Your SE tax. At $40,000, your tax is going to be $6,000. So if you're at a $40,000 limit, we know that your EIC payment isn't the $7,400. Even though you got 3 kids, at $30,000, you may be getting $6,000. So that may just be covering the SC taxes that's due. There are no large refunds, especially if you're making over $20,000 in business. And if you're saying you're making under $20,000 in business, let me say this, and I am saying it with love, concern, and just trying to enlighten you guys. I wouldn't give you the information if I have not seen it, experienced it, or know it. You making $20,000 in your business isn't you being head of household. Head of household is part of due diligence. And at a $20,000 income limit, it is not suffice for you to say that you're taking care of you and 3 kids and maintaining a house with $20,000. They are looking at you have to be over the federal poverty level in order to be considered head of household. So a lot of my people who are using business returns to report the income you're making from services, do not feel like you must say you're a head of household just because you got dependents. Head of household is also based on the income you make. It is not restricted to just because you got dependents, oh, you're a head of household. Head of household comes with, you have to complete and show that you were able to take care of a house. It's called cost of keeping up a home, and it has to be at least 51% of the expenses for the entire year. And they also mention about the government benefits. If you're receiving them, you can't say that's what you have to take care of your home, but it has to be included when you're showing this is also what I use to take care of my home. So therefore, you saying $12,000, even if you're receiving those benefits to help you get through every year, you don't need to be saying you're head of household. Head of household comes with income limits. And if you're under $25,000, you're still under the federal poverty line. Head of household is a triggering status. It is part of due diligence. It is the only filing status that is part of due diligence, where you have to ask more questions as tax preparers. As the person who's doing your taxes, we have to ask more questions because you're saying head of household. So now we have to ask you, how are you paying the bills? How are you feeding your dependents? How are you taking care of yourself? How are you guys doing this and how are you doing that? And a lot of people feel like that's a little bit too invasive. So if you are one of those who you know your income is sort of low, you do not have to be so uptight on the head of household. Your refund amount is not going to change whether you're saying you're single or head of household. I promise you, your refund amount is going to stay the same. A lot of people don't understand you get an audit triggered just from saying head of household. And it can be your W-2, it can be your kids, it can be your parent, it can be your sister, brother, your siblings. It can actually be everything on their return can be truthful and actual and facts. But the only reason why it triggered for you to get reviewed and audited is because you're saying, I'm head of household and I only made $18,000 and I got 3 people on here that I say I'm taking care of. Now, logically, we know individuals who can make it off of $18,000 a year, making that, yeah, that's over $1,000 or some dollars a month. We know individuals who can make it. We do. I do, at least. But when you're filing for tax purposes, it doesn't make sense to them to say that's enough to take care of a household. So y'all get out of that head frame of I need to be head of household because that's how I'm gonna get my money. No. So single is better at almost 20,000 federal, 896 taking out 2 kids, 13 to 14. Yes. Yes, ma'am. And I'm gonna tell you why. Because when you're saying that you're single and not head of household, you're no longer gonna be under the guise of proving that you're head of household. You're not gonna have to be producing all those different costs of keeping up a home documents. The utility bills, the rental agreements, all of that. If you say single, the only thing you're going to have to prove if anything does go on with the IRS is that those are your kids. That's it. Nothing more, nothing less. What about if you allow them to take the max out of your check for federal? Now, Kimberly, let's talk about that, because y'all are the ones, if y'all are working on these jobs and y'all are paying in y'all taxes, y'all can be seeing refunds of $12,000, $13,000, $14,000 if you got 3 kids. Why? Because not only are you going to be getting all of the earned income credit, all the additional child tax credit, but whatever you're paying in, and let's do an example real quick, Kimberly, because the 15,000, the 10% on that will be $1,500. So now instead of you getting a refund about 9, add 15 to it, your refund is about $11,000, and that's with 2 kids. So it happens, it can happen for you. But that is at a W-2 level. That is income that is on the W-2. It is not going to work on any other type of income at those amounts, at those levels, giving out refunds. Say you got 2, Kimberly. Oh, yeah, so you're going to be good. You're going to be good, Kimberly, at 2. Okay? So y'all just know W-2 income, it hits different in the upcoming season. Different from business income. Business income is any income reported on the 1099 NEC or the 1099K. Both of those forms are considered business incomes. And the 1099K is going to be crucial for individuals who are in business and you don't have good record keeping skills. The 1099K will help you show, say you praying, Kimberly, you got it. But the 1099K is going to help you guys show proof of profit. It's your profit motive. You show that, hey, no, if I'm saying I got a business, here's proof that is already reported to the IRS like a W-2. That's why I say the 1099Ks is actually going to be a saving grace and a lot of proven documents for some of you guys who are filing Schedule Cs. So don't be so quick to say, I don't want it. I don't want to do it. Like, I don't want that form. If you know that you usually file a Schedule C, and when it comes time for you to report your Schedule C income, you are having to sit down with your tax preparer and do a reconstruction record because you don't have a record of anything. That 1099K is going to be a good record for a business. 1099K, 1099 NEC, those type of incomes are subject to the SC tax. So if you got either one of those, just know you're going to be getting taxed 15.3% on any amount over $400. It's going to happen. Now, if you're a person who you're working full-time and you got a side hustle, that side hustle, any profit that you have, your net profit is still going to be taxed 15.3%. So yes, it'll add to your AGI and you'll get earned income credit based off of that income total at the AGI level, but it is not going to erase the fact that you have those SC taxes. It's still going to take it out. Well, hey, Kay, how are you? Hello. But yeah, guys, so I hope everyone understood what I was trying to say in this live. Next week, because I'm not going to do another one on YouTube until next week, Mondays and Wednesdays will be the days that I'll be doing the lives on YouTube. Y'all can share the information. But next week, I'm going to see how I can bring the screen up so we can start doing some estimates. I'm going to probably take 1 or 2 people to give me, their scenarios, and we plug it in just so we can see how it works. But I am going to be doing scenarios based on the type of incomes I talked about today. We're going to do one where it's just Schedule C, one where it's just W-2, one where it's a combination of Schedule C and W-2, and then how those other incomes that's not considered earned income but taxable income plays a part in adding to the AGI, but you're not getting credits off of the entire amount that you're being taxed at. Because the amount of credits is based on a certain amount of a certain type of income. And I'll give you a quick example of what I'm talking about us looking at next week. For individuals who got unemployment income, you got $10,000 on a 1099G, but then you got a W-2 for $10,000. $20,000 is your taxable income, but your credits is only going to come off of $10,000 because it's only $10,000 on a W-2. That income from that 1099G unemployment is not going to count. It's not going to help when it comes down to generating a payment for credit. But it is going to count as taxable. So it's a lot of different scenarios that you guys have to be ready for in the upcoming season, because a lot of you guys have different types of incomes that you got to report. And then we need to look at the difference on what is a deduction and what is a credit. A lot of people don't know how to read 1040s. Y'all know I'm one on showing y'all how to read the 1040. So we're probably going to also read a 1040 next week. Just so you can understand, when you go to file, before you sign your name, you can scan over that 1040 and make sure that your income amount is being reported in the correct space. How you can see what credits is being rewarded to you, what deductions have been added in, what payments is being reported that you have made. Because we have seen a lot of returns. I know I've seen 2 in the last day where individuals have payments entered that they paid into the federal government, and that is fraudulent. They don't have it. And they did not know that this is what it was saying on their tax return. They just know the tax person told them that they was getting back X amount of money. But they didn't know where it was coming from, but they just know this is what their refund was. So y'all got to stop falling for that trick, because y'all need to know, read it over. Page 2 usually holds all the truth. Page 2. Page 2 of your 1040 reports your non-refundable credits awarded, your payments that were reported, and the refundable credits that you got. It shows you everything on your page 2. Now, granted, all y'all have y'all page 2 of your 1040s, but when it come down to looking up the form where that income came from, y'all don't have it because they did not include it in the copy of the tax return that they gave to you, because they know it wasn't supposed to be on there. So when they printed out your return, they printed out just them pages that you needed: the 1040, page 1, page 2, your 8879, maybe your bank products. If you had a state return, maybe that, but that was all you got. And if they know that you knew for a fact you had a business, they'll give you the Schedule C. But you weren't seeing the 4136, which was the fuel credit. You weren't seeing the IRC payments, the estimated overpayments that they put on there. Like, y'all need to know what you're looking at when you're going to do your returns next year, so you're not a victim. It ain't even identity theft at this point, because people are openly giving their information to individuals who are telling them incorrectly about how they qualify for these credits. They're making individuals think they qualify for something they really don't, and y'all give the information to them, and then they go and do whatever it is that they say you qualified for, and then the IRS say, you weren't qualified for that. But let me explain something. The danger in reporting that you paid in money to the federal government that you really did not, you're saying you paid it to the federal government. Y'all are bold. That is a bold move. Do you think the IRS cannot track that you never made a payment under that Social Security number or under that business EIN to them throughout the tax year? And y'all letting them put ridiculous amounts on there. That is more than just a fine and a penalty. So y'all need to know what you're looking at when you're looking at your 1040 page 2. Page 2 holds all the secrets of the tax return. I told y'all, and we're going to read them next week. Next week, I need for y'all to know the 2023 version of the 1040 have been released. Yes, it's still in draft form, but I don't care. We're going to look at it, because y'all need to be prepared on what the changes is on the form. We already know they broke the income line down, number 1, from 1A to 1Z now. It's not just the line 1 anymore. It is broke down to show all the different type of incomes that is reported, and all of them that's reported over there is not recognized as W-2 income. For individuals who are dealing with the Schedule H's, y'all are still telling people they're household employees. I know y'all seen the change that occurred this year, and it's not changing next year. They are still requiring EIN numbers for these people who you saying you being the household employee for. And that is because they have to pay their share of employer tax for you being their household employee. Employee income, household employee income is originally supposed to be reported on a W-2. So the Schedule H isn't for business owners. The Schedule H isn't for individuals who are working as contractors or getting paid for a service or product on the side. The Schedule H is not that. So y'all be weary with that as well. It's a lot of things that you have to be ready for in the upcoming season because they are really putting a lot of the credits, a lot of the deductions back under a microscope. They're setting the traps. And I just don't want anybody to fall in it. You can potentially get good refunds if you have W-2 income. So if a child just turned 17, October 21st, so Miss Lisa, if the child just turned 17, you won't get child tax credit, but you will get earned income credit. They cannot be 17 at the end of the year. So if they turn 17 December 31st, you don't get it. Not the child tax credit. Now that's only for the CTC and the ACTC, but you will still qualify for earned income credit for that 17-year-old. That's not going to change it. Okay. All right, guys. So we're coming up on 45 minutes. I was intending to do 45 minutes to an hour. I appreciate everyone joining me for this live. I'm not worried about the views right now. We'll get it built up once everyone realizes I'm not going to really be on Facebook like that anymore. They're going to come on over here because that's the only way they're going to be able to get this information that I'm giving. They will have to follow the YouTube or either the Twitter, one of the two. That's it. I'm not going back over to Facebook. I appreciate the integrity over here at YouTube. So I'll be here a little bit more frequently. I may do a live where I share on Facebook, but it's not going to be often. So this is where we will be. Y'all join me on Monday. We're going to be looking more into these actual credits, how they work. I'm going to try to have it to where I can work and see how I can put the screen up. So y'all can actually see how this stuff works. I may even go as far as to showing y'all how people create these mass refund amounts, because some of these refund amounts are not real refund amounts. Some of them is I can make the system read what I want it to read. I can go put two amounts in on the W-2 and just pan over and let y'all see that this is what this is what this is, and this is what I'm doing for people, and it not be true at all. But it's a way for me to get y'all to at least come and see what I'm talking about. So it's a good marketing tactic, but you guys got to be careful with it. I love people who love to research stuff for themselves. Let me see for myself. I ain't talking about just throwing your information at somebody and saying, I'm going to trust you. Let me see for myself. I'm talking about before I put it in your hands, let me go and see for myself if this is what it is. Let me go see for myself if this how that works, because I don't want to just give my information out and then I'm stuck. And that happens as well. When y'all are getting estimates, don't give y'all actual information out. Don't do that. You can give dummy information. You're getting an estimate. You're not filing the return. And we're going to also look at next week, the 1040, because I need you guys to know when someone is reporting a credit or a payment that you know you did not make. So even if you let them send it off, you know it's a risk that you're taking and the amount that they're saying that you got paid. Y'all need to be able to reach our 1040s as well. Okay? Nothing wrong with having the knowledge. I'm going to wish you all a blessed rest of your day. May you all just enjoy yourselves. Remain in peace. We're not going to be dumb or crazy going into the next tax season. We're going to be realistic and ready for whatever, because that's about what it's going to be. I see they're ramping up about the claiming the dogs and stuff again. Let's just, we'll talk about it. But y'all have a blessed day. And I'll talk to you guys next week. See y'all Monday.